around.
You know, we mentioned the 30-year. I mean, it's not, we don't often talk about, you know, when it moves up, but what's the significance of that at the very long end of the curve? You write about it today.
Well, the 30-year is its own little world. I mean, it's an instrument that pensions and insurers like to buy, and frankly, if you look at it, they're not big enough to come in and step in en masse. They all have different areas that they want to buy the 30-year at. So the 30-year does drift. It's kind of, that's why really the 10-year Treasury is the key thing to look at. And for now, the 10-year Treasury is at 4.14. So we sort of were at around 4.28 when Powell did the pivot in December. That's the really important level for the 10-year. If you think the economy is starting to reaccelerate, that inflation isn't really coming down, the Fed's not going to be cutting soon, that 10-year probably will go and test 4.28.
So what's the consensus, Mike? Are you finding that some of the sources you're talking to do think that the 10-year is going to move as high as 4.30?
There's a risk. They see it as it's part of the sort of risk potential. But what's really interesting is that every time we've been popping up into this current area, there have been buyers. And I do think you've got a lot of investors back in November and October said...
They missed out on the 5,
Well,
right?
no, but I see a lot of, actually, I think a lot of the long-only guys and ladies who manage money, they bought at 5%. They didn't know whether it was going to keep going,
right.
But they bought at 5.
So that was pretty attractive.
Yeah, and so they've got that behind them now. So they're quite happy to keep scaling in here. And again, some people say, oh, 4% is the new 5%, but it makes sense when you already stepped up and bought at 5. And what's really interesting too, when you talk to investors who want to move into corporate credit, they're telling me too, I am buying 10-year treasuries because 60-40 will come back. If stocks hit a rough patch and I own 10-year treasuries above 4%, they're going to be at 3%, 3.5% if stocks take a 10% drop or something like that, right? So that's where they see the insurance value of owning treasuries.
Saving 15 seconds. If you have any thoughts on what Michael just said?
Yeah, well, it's interesting to me because if we do see yields climb higher, it could, at some point, that circular effect, less liquidity for stocks. So it's a very delicate balance here. Technically, it looks like we could actually see yields climb higher. It's very similar to the Silicon Bank Valley situation where yields crashed, then fluctuated, and then higher.
All right, Abigail Doolittle and Michael McKenzie. Guys, thank you so much. So appreciate it. You're listening and watching Bloomberg Business Week, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Apple has reached a make or break point in its decade-old effort to build a car and is pivoting to a less ambitious design with the intent of finally bringing an electric vehicle to market. Apple shares, they are trading higher now by about 0.4%. A mixed Tuesday for the U.S. stock market. The Dow lower, the S&P, NASDAQ, they are both advancing. Little change right now for the S&P, higher by 3 points. That is a gain of just about 0.1%. Stocks are stuck in a narrow range ahead of a slew of company results that should offer insights about the state of the global economy. After the close of trading today, we will be hearing from Netflix. Tesla reports tomorrow, Intel on Thursday. The Dow down 122 right now, drop there of 0.3%. The NASDAQ Composite Index up 18. That is a gain of 0.1%. 10-year yield 4.13% with a 2-year that's yielding 4.39%. Gold up $6.50 the ounce, up 0.3%, while West Texas Intermediate crude is down 0.6%, 74.32 a barrel. Again, recapping, stocks are trading mixed, little change. The key takeaway right now with the S&P higher by 3 points. That is a gain of just about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, so appreciate it, Charlie Pellet. Well, we are all in on politics for a little bit here. First up, we want to get to geopolitics specifically, really the latest on the Middle East, the war in Gaza. Israel said 24 of its soldiers were killed in Gaza on Monday, yesterday. There were a single-day death toll for the military since the war against Hamas began back in October, Tim.
Elsewhere in the region, the U.S. and U.K. launching more airstrikes against the Houthis in Yemen on Monday. That latest effort, one to stop the Iran-backed group's attack on ships in the Red Sea. Carol, those militants have vowed to continue attacking vessels until Israel pulls out of Gaza.
All right, we do want to get to today's Bloomberg Big Take. It's one of the most read stories on the Bloomberg terminal. It describes a transformed Israel since the October 7 attacks. Ethan Bronner is Israel Bureau Chief and Senior Mideast Editor for Bloomberg News. He has spent many years living in and reporting from Israel, going back to the 1980s. He joins us on Zoom from Tel Aviv. Ethan, always appreciate when we get some time with you. You write about this profound transformation that Israel has undergone since the October 7th attack. Talk about this transformation of Israel and what it means.
Sure, Carol. It's just been very, very striking because I got here again. As you said, I've been coming for many years, but I began my Bloomberg tour here about a year ago. And when I arrived, there was a sense of, there might be a deal with Saudi Arabia. I mean, there were political divisions, no question about it, but it was kind of money-making, the good life, restaurants were doing very well. All that sort of thing, incredible amount of film and TV. And then on October 7th, this attack created such an incredible sense of vulnerability and sadness and anger that a lot of that went away. First of all, 300,000 people were pushed into uniform and to the north and the south. And, restaurants closed, businesses closed, schools closed, and it stayed that way for a very long time. And in this time, there developed an enormous sense of sadness in the country. And as the war began and went forward, an enormous sense of determination to uproot Hamas entirely from Gaza, which is quite distinct from how most people around the world look at what's going on. They see the 25,000 dead, according to Hamas officials, and the nearly 2 million people homeless, and they see a human disaster, and it's just an enormous gap between the two perceptions, and that's what I wanted to write about.
How has Israel and how have Israelis, Ethan, internalized the way that they see the rest of the world looking at the struggle that they believe they're facing?
Well, first it's useful to note, Tim, that the Israelis don't see much of what's going on in Gaza in terms of the human toll there. They're focused on their own kids, their soldiers, and what's going on here. So they don't see it. They therefore abroad, when people talk only or largely about that, they feel that they're being neglected, that the pain that they've gone through, that the peril that they're in has been ignored. And another thing, it's worth mentioning that there is a kind of a Holocaust DNA in Jews that goes back not so long ago, and so there was this sense that that Israelis are truly under assault, and also that Hezbollah and the Houthis and a whole bunch of other militias not far away all want to do the same thing, and nobody seems to really care. That's how they feel.
Hence the fight to the bitter end, correct?
Hence the fight to the bitter end, correct. Look, I mean, will there really be a fight to the bitter end? We don't know. Things are dynamic. Things do change. Today, as you guys mentioned, 21 people, 21 soldiers were killed. I'm sorry, not today, but yesterday. The worst event since this war began in October. And these kinds of things will eventually take a toll. But for the moment, there is a very strong desire in Israel to do this.
But
yes.
Ethan, we have for years, and I know you know this better than most, we've often talked about innovation and the startup community that is in Israel specifically. We've often had guests on our air, no doubt about it. Remind our viewers, though, and go back there a little bit about what the Israeli economy, and this is a personal story, human toll, and I'm going to, if I may, just for a moment, focus on what Israel has become in terms of an economy and a business community. When I say fight to the bitter end, there's also a huge, yes, personal cost that you can't put a price on, but there's also a business cost to all of this and an economic cost.
Absolutely. No doubt about it. So in the fourth quarter of 2023, the projection is that Israel's GDP fell by 19%. And they've had to come up with an extra $30 billion looking forward, 2024 for the budget, in lost revenue for the government and in extra money for the military. And that's a lot of money. They've raised taxes, and all these young people and all of these cool companies that have become unicorns, that are doing so well and that are on NASDAQ, there are many of them, of course, who are in Gaza or in the northern border. So therefore, the companies couldn't function. So yes, you are right. Now, that said, in the last couple of weeks, a lot have come home, and there is a sort of recognition in Israel that for it to fight this war, it needs a strong economy, and therefore it needs to kind of balance these two factors.
Right, and to have something to eventually, after the war is done, to come back to. I mean, we see this in Ukraine, correct?
Yes, indeed. Yes, I mean, I don't think that when you say to come back to, after all, Israel is not under that kind of attack the way Ukraine is. Right. But yes, I mean, you can't just neglect the economy for months and months and months, expect that that it'll be there when you come back. So absolutely, this is an enormous focus as well, and they're trying. And when the army announced a couple of weeks ago that it was going to freeze a whole bunch of reservists, it said partly in order to get the economy going again. Now, that said, I mentioned the Northern Front and the concerns about Hezbollah and Lebanon, and that could blow at any time, and all those people are going to go back in uniform and head north. So we really don't know what it's going to be.
Ethan, we can't talk about the transformation that Israel has undergone since October 7th without talking about Prime Minister Benjamin Netanyahu. How was he viewed in the days and months leading up to the attack versus how public support has shifted around him now, and even versus when we spoke to you back on, in the early part of October?
Sure. Well, so in the months leading up to this war, he was in trouble because he had created a whole series of populist policies aimed at reducing the power of courts, and people considered that an anti-democratic move. There were street demonstrations of up to a couple 100,000 people every Saturday night. Many of the people who are in startups, who are in the Air Force, the sort of elite of the country, the secular elite. So he was in trouble in that way, although he had a strong populist base. On October 7th, the man who had always put himself forward as Mr. Security lost that sheen, because the worst security breach in Israel's history occurred on that day, or certainly one of the very worst. So he has been, his poll numbers have cratered. At the same time, interestingly, and this goes back to our original theme, even though people do not want him to stay in office, they recognize that this joint effort to uproot Hamas is more important than getting him out of office, and they're willing to wait. Again, how many more months they're willing to wait, we shall see. But it's been 4, and so far it's been holding.
One last question, one last thought in terms of what peace would mean. On the international stage, certainly folks weighing in and thinking about it. Just got about 30, 40 seconds here. What are you hearing about that? How should the world be thinking about that at this point?
It would need more than 30 seconds, Carol, but I will say this. But I will say that the world is eager to see a Palestinian state. I understand that. I would say that Israel is too traumatized to talk about a Palestinian state, and there is no real sort of projection of what peace is going to mean right here at this time. All they know is they want to get rid of Hamas. I'm not saying they're doing the right thing. I'm just telling you that's what's going on.
All right, we're going to leave it on that note. Hey, listen, Ethan, thank you so much. We know a lot on your plate, but appreciate getting some time with you. Ethan Bronner, Israel Bureau Chief, and as we said, Senior Mideast Editor at Bloomberg News on Zoom from Tel Aviv, Israel. You can read his story and more from Bloomberg Big Take. It's on the Bloomberg Terminal, also, of course, at Bloomberg.com/Big Take.
Yeah, among the most read on the Bloomberg Terminal, and again, today's a Big Take. Hey, let's get an update on what's going on with the markets. The Dow down just about 0.3%. The S&P 500 in the green, up fractionally, while the Nasdaq up by about 0.1%.
All right, just a quick headline. Turkish Parliament approving Sweden's accession to NATO. So just crossing the Bloomberg Terminal. All
right, let's go to check the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. As you've been hearing here on Bloomberg, it is primary day in New Hampshire. It's a race between Donald Trump and Nikki Haley. And voter Valerie Maxwell thinks Haley will do better than expected against the former president.
I think New Hampshire is going to surprise everybody and that Nikki is going to be the candidate.
Valerie Maxwell was one of the 6 votes that were cast in Dixville Notch, the first results of the day, with all 6 going for Haley. Florida Governor Ron DeSantis is out of the presidential race, but he's taking action that could hurt his former rival, Donald Trump. He's quashed a Florida state senator's proposal to use public funds to help pay for the former president's legal bills. State Senator Eliana Garcia, a Republican, says she's withdrawing the bill after DeSantis made it clear he would veto it. It would have created a $5 million Freedom Fighters Fund to provide financial support for any Florida resident running for president who faces legal action, a veiled reference to Trump. The latest strikes against the Houthis carried out by the U.S. and the U.K. were apparently successful. National Security Council spokesman John Kirby says they're trying to degrade the Houthis' efforts to fire ships on the Red Sea.
These self-defense strikes targeted missile systems and launchers, unmanned aerial and surface vessels, storage facilities, fighter aircraft, helicopters, and attack boats.
Kirby says the strikes will continue if the Houthis' attacks continue. A major step forward today for Sweden in its drive to join NATO. Turkish legislators have approved Sweden's bid to join the alliance in a step that's been delayed by Turkey for more than a year. Turkey was concerned by Swedish demonstrations by supporters of the outlawed Kurdistan Workers' Party, as well as Quran-burning activists. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow trading lower, the S&P, NASDAQ 100 index. They're all advancing. Russell 2000, though, in the red right now. Small cap shares down by about 0.3%. So here's where we stand. S&P now up by 4, gain there of 0.1%. Dow Industrials lower by 117. That is a drop right now of just about 0.3%. NASDAQ, the composite index, up 22, higher now by 0.1%. 10-year yield 4.13% on the 10-year. The 2-year 4.38%. Spot gold higher by 0.4%. 2,029 the ounce, while West Texas Intermediate crude now down 0.5%, 74.36 a barrel. Netflix reports after the close of trading today. We do have Netflix shares advancing ahead of its earnings report. Netflix has acquired the exclusive rights to Raw, as well as other programming from World Wrestling Entertainment, marking the streaming service's first big move into live events. Nick Khan is the president of the World Wrestling Entertainment, and he spoke this morning with Bloomberg Radio.
So we're an entertainment property as much as we are a sports property. 52 weeks a year live, consistent programming, an audience that is actually quite global. If you look at India, India is not part of this deal. But if you look at India, we're the second most popular sport in India. If you look at the United Kingdom, we're the 4th most popular sport there. This deal will take effect in the UK. So in addition to the United States, it allows us to gain even a greater global footprint as we look to expand the business.
And again, Netflix shares, they're up now by about 0.6%. Netflix, again, after the close of trading, will be all over those numbers as they break. And by the way, you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Apple shares, they are up 0.5%. Apple has reached a make or break point in its decade-old effort to build a car, and is pivoting to a less ambitious design with the intent of finally bringing an EV to market. Again, recapping, stocks higher, S&P up 5, gain now of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're a big fan of Raw, aren't you?
No, I'm a big fan of the deal. I think it's really interesting what they're doing. I've actually never seen it.
You're among friends. You can say you are.
We should go.
I think it's interesting about live events. We're going to talk about this later with our Gita Ranganathan. But this idea of live events, destination viewing, having to tune in at a certain time to see something because it's live, there's something to be said to that.
You know what they say? They say that wrestling is scripted. But if you want to watch the real thing, you just look to politics.
It's not real?
You just look to politics. That's the real thing.
Politics, yes. So let's get to it. As we said, we're all in on politics this hour. And now we want to get to the race in the U.S. New Hampshire's primary today, staged for a crucial showdown between Donald Trump and Nikki Haley. You know that. The last major challenger standing between the former president and, of course, that GOP nomination.
Hey, for more, let's bring in Joe Matthew. He's the co-host of Bloomberg Balance of Power on Bloomberg Radio and TV. He's live right now in Manchester, New Hampshire. Joe, yesterday you told us that the vibes were a little bit chill for the First Nation primary. I'm looking behind you. I don't see a lot more people than there were yesterday. Have things picked up a little bit now that it's time to actually hit the polls?
It's actually, it feels pretty sleepy, I have to be honest. And this would normally be the calm before the storm. This is when the candidates go meet with their teams, get some thoughts together, try to find a few quiet moments, if not a nap, before what is likely going to be either a victory or a concession speech later on. We were talking to our friend Rick Davis. He said John McCain used to go to the movies on the day of the primary because there's just not a lot you can do. There's no more door knocking. There are no more events, no more town halls. It's about managing your anxiety, waiting for the results. And in this case, we've only got 2 people. So Nikki Haley probably feeling a good dose of anxiety today as we wait for the results. The latest daily tracker has Donald Trump at 60% now for the first time, and Nikki Haley in the upper 30s. So this is feeling like it might be done. And I hate to say that before votes are counted. New Hampshire is known for serving up a surprise, and we're certainly ready for one.
Well, you've talked about this a lot. We have the so-called undeclared voters, the independents, the former Democrats.
Yes.
Nikki Haley has been counting on that. So you're saying, based on the polling, that maybe she's not going to grab all of those.
Well, even if she did, though, Carol, this is the problem. It still might not be enough. There is a prediction from the Secretary of State for a record turnout that would be somewhere in the area, he says, of 320,000 voters. Even if that happened and every independent voter split for Nikki Haley, she still, based on the data here, could struggle to beat Donald Trump. The question is, would a strong second suffice? And that's exactly what they're predicting here in their attempt to manage expectations. Let's remember, she's got a $4 million ad buy coming in South Carolina. That was first reported by Bloomberg over the weekend, and it does make you think that she's not preparing to drop out. So if she can come close enough, they're going to try to spin this into a narrative that says we can move into South Carolina with some momentum.
You talked about candidates, doing some door knocking. Joe Biden, the president, hasn't been doing door knocking. We know that in terms of New Hampshire.
Right.
But
yeah.
It does seem like something that you've been talking about, we've been talking, and this has to do with a deepfake phone message that purports to be President Biden. It was circulating over the weekend. It urges voters in New Hampshire not to cast their ballots in today's Democratic primary. Let's take a listen for everyone.
What a bunch of malarkey. We know the value of voting Democratic when our votes count. It's important that you save your vote for the November election. We'll need your help in electing Democrats up and down the ticket. Voting this Tuesday only enables the Republicans in their quest to elect Donald Trump again. Your vote makes a difference in November, not this Tuesday. If you would like to be removed from future calls, please press 2 now.
All right, again, a deepfake phone message that is not President Biden. We haven't really gotten to the bottom of it, it sounds like, Joe, but this is just another thing that this time around, once again, this U.S. election cycle, we're going to have to be dealing with this.
That's true. It's not the first time we've seen the impact of AI or a candidate's voice reproduced or created like that. The problem is, Carol, we don't know where it came from, to your point. We talked to Dean Phillips yesterday, the Democratic congressman who's trying to make a stand here against Donald Trump, even though the delegates have been stripped from Democrats, which is a whole other story. They changed the order of the primaries. But there was a thought that he might be behind this. He absolutely denied it and condemned the ad, and then pointed back to Joe Biden and said if this guy knew what he was doing, he would have already had a policy to deal with this. But, as we discussed earlier today, Washington is having enough trouble getting out of bed in the morning and passing a budget, and I'm not sure how soon they're going to be able to get to AI. This is a matter of confidence, right? If people don't believe that they're even hearing from the actual candidate, what good is any of this?
If this is happening during a primary, the first in the nation primary, Joe, what does that portend for the general election?
Yeah, just imagine. What are we going to see on social media? What kind of ad campaigns are we going to see, knowing that we will have so many months and so much money? Look, whether this ends tomorrow or in South Carolina, it will be the longest general election of all time. And you know that if it's going to be a Trump nominee, a Trump nomination, he's willing to do a little experimenting here. And I'm just not sure what form that will take. But it's something that we have to keep talking about because we're going to see more of them.
Hey, one more thing we want to talk about before you go. Dean Phillips, the long shot Democratic challenger to President Biden, not widely recognized across the United States. He's not giving up. You and Kaylee Lines talked to him. What's his strategy, particularly given that President Biden isn't there?
It's interesting because even if he were to somehow win this so-called primary where the delegates don't count at the convention, it's unclear where he would go next. I mean, he really has no path to victory. I think the idea here for Dean Phillips is maybe to get some name recognition, to do more along the line, to maybe challenge the status quo, but he's been largely blackballed from his party because of this action. I spoke with Congresswoman Annie Kuster, a Democrat who's aligned with Joe Biden. She called his campaign ill-advised and unimpressive. When I talked to Dean Phillips, he told me that she said that to his face, which gives you a sense of where he stands there in the family conversation.
Question is, what does the end game look like for him, Joe? We got like 20 seconds left here. Any idea how long he stays?
I think a lot of this, Tim, is just like it's like these candidates on the Republican side who want to be available. If Trump should become incapacitated due to legal issues or something else, you might have the same version here for the Democrats.
Very interesting. All right, Joe Matthew, thank you so much. Co-host, of course, of Bloomberg Balance of Power. And be sure to tune in tonight for Balance of Power on radio and TV at 8 p.m. Wall Street time. They will, of course, be covering all of the happenings at that New Hampshire primary. So, Joe, thank you so much. Really appreciate it.
You think Joe's going to go catch a movie like John McCain used to do?
That's really funny.
I don't think so.
Take
He's got a lot to do.
A little 20-minute
8 p.m.
reboot,
tonight.
if you will. All right, we're not rebooting. We've got lots more to come. Stick around, everybody. You're listening and watching Bloomberg Business Week. Carol Massar, Tim Stanovic. This is Bloomberg.
Investors. I'm Charlie Pellet. Apple has reached a make-or-break point in its decade-old effort to build a car and is pivoting to a less ambitious design with the intent of finally bringing an EV to market. Now, sources tell Bloomberg after previously envisioning a truly driverless car, the company is now working on an EV with more limited features. Right now, we've got Apple shares. They are advancing by about 0.5%. Earnings news. GE is predicting profit this quarter that will fall short of Wall Street's expectations. 3M lower after the manufacturing giant's 2024 earnings forecast missed the average analyst estimate. 3M shares down now by 11.2%. RTX forecast 2024 profit that topped expectations as the aerospace and defense giant ramps up work on a costly recall of its top-selling jet engine. And with more on the RTX story, here's Bloomberg's Steve Rappaport.
Charlie, it comes as the aerospace and defense giant ramps up work on a costly recall of its top-selling jet engine. RTX says adjusted earnings are expected to be in the range of $5.25 to $5.40 per share this year, compared with the $5.28 average of analyst estimates compiled by Bloomberg. RTX is preparing to transition to a new CEO amid intense investor scrutiny as it works through a recall of roughly 3,000 Pratt & Whitney jet engines over components made with contaminated metal powder that fail prematurely. Replacing the parts will cause hundreds of Airbus's top-selling A320neo aircraft to be grounded for months over the next 3 years. The issue has disrupted schedule and growth plans at carriers including Spirit Airlines and Europe's Wizz Air Holdings. Charlie?
And that's Steve Rappaport reporting. We've got RTX, Raytheon, up 5.5%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenevec. That's Carol Masser. And let's get a check on the latest world and national news. For that, we go to the Bloomberg 991 newsroom and Nancy Lyons. Hey, Nance.
Hey, Tim. Turkey has approved Sweden's bid to join NATO. Turkish legislators finally took a vote today after dragging their feet for more than a year. Turkey felt Sweden was too lenient toward groups that Turkey views as a security threat. And it's been seeking concessions from Sweden, including a tougher stance toward Kurdish militants and members of a network that Ankara blames for a failed coup in 2016. Well, in his first public appearance since his secret hospitalization earlier this month, Defense Secretary Lloyd Austin today addressed more than 50 nations that make up the Ukrainian Defense Contact Group. While a new U.S. package of aid is on hold, he urged others to step up.
I urge this group to dig deep, to provide Ukraine with more life-saving ground-based air defense systems and interceptors.
Austin's speech was also a pitch aimed at Republican lawmakers who have so far refused to approve $60 billion in new funding for Ukraine. Even though current funding is close to running out, Austin is still recovering from home, and he spoke to the group via a video link. The Oscar nominations are now out, and Oppenheimer is the most nominated film of the year with 13 nods, including Best Picture. Poor Things, second with 11. Meanwhile, Greta Gerwig's Barbie, the other half of last summer's Barbenheimer phenomenon, is up for 8 awards, but that was shut out of some of the biggest categories, including Best Director and Best Actress. The Oscars will be handed out March 10th in Los Angeles, hosted by Jimmy Kimmel. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Tim and Carol.
All right, Nance, thank you so much. All right, so we've talked a little bit about, or we will a little bit more, about airline stocks because they are definitely an outperformer in today's session, getting a lift thanks to upbeat results, really the outlook from United Airlines. But one more thing before we go this hour. We know for a lot of airlines, right, the seats are getting, it feels like, smaller. We have less room. We're paying for everything. We don't get free peanuts. We haven't done that for a long time. Well, occasionally, sometimes they throw you a bag of pretzels. But nonetheless, it sounds like densely packed aircrafts, that's going to continue for us.
No, it's a lot better for the environment. And you have these airlines that are under pressure right now to actually lower their carbon footprint. And it turns out that when you pack more people on a flight, when you make the seats smaller, when you don't have beverage carts or blankets, which
less
who
weight,
knew
right?
less weight. Who knew added blankets were so heavy? Yeah, and it's actually could be good for the environment. Not so good if you're the flying public.
There's a great story on the Bloomberg. The 5 airlines in the world that emit the fewest pollutants per passenger are all low-cost carriers. Wizz Holdings, Hungary-based carrier. It serves mostly the Middle East and Europe. Major brands including Delta Airlines, Cathay, British Airways belch out almost twice as many emissions for every passenger they carry, according to the data that we cracked. So just something to think about. Get ready to be squeezed a little bit more. No
are you ready?
No, I want space.
There's also the economic incentive
I do
here.
care about the environment.
But there's also the economic incentive that there is a group of passengers who want to pay for that luxury experience, or at least not to be packed. And there are products that cater to that right now. The question is, can they do that but also lower their emissions?
All right, for those of you watching TV, up next is The Close. For those of you staying with us, Bloomberg Business Week continues. Coming up in our next 2 hours, United Air's 2024 outlook beats. We talked about this. We're going to look into the sector because it is certainly an outperformer. We're going to talk about a 30% share for EVs. How does that sound?
It sounds like it's not as high as a lot of people would hope.
No, exactly. How to live a stress-free financial life. The Tesla earnings bingo card. Yes, we've got it. And then we've also got Netflix earnings. So a lot happening on Bloomberg Business Week. This is Bloomberg.
Radio.
Yes, indeed. We hear it from the Fed, the IMF, from everybody, don't we?
ECB, also.
Higher for longer. We're getting the T-shirts printed up.
How dare you?
All right. Anyway, folks.
With friends like Carol.
I'm just having fun with you. Hey, listen, we are 1 hour. Listen, we're going to hear from the Fed next week. I bet they're going to say they have all been banging the drama of probably higher for longer. So you're on it, Mr. Stenovic.
Oh, thank you.
You're very welcome.
We're not going to get an update on the summary of economic projections, though.
Hey, listen, everybody. No, we are not. We are 1 hour away, less than 1 hour away from the closing bell. Stocks kind of in limbo, although we're back up near, at least on the S&P and the NASDAQ, up near our highs of the session. Basically, it's all about earnings right now, really giving us some clues that hopefully maybe the global economy will keep on ticking, but that's what we're kind of parsing through.
Okay, well, speaking of earnings, United Airlines 2024 outlook beats and pulls up its peers. That group outperforming. We're going to go through the numbers, also the concerns over Boeing, and the outlook for the entire group.
Also a 30% share for the EV market. How does that sound? Well, that's coming from the chairman of Toyota, so we're going to break that down.
Netflix reporting after the close. We're all over that, and the market reaction, plus the huge news from Netflix early this morning.
And you want some fun? Get ready to play, everybody. We've got the Tesla earnings bingo card. It's a real thing. It's happening.
It's happening.
It's happening.
What are you going to listen for? We're digging our own grave is one of them.
Yeah.
The sound of Elon Musk actually smoking a joint is on the bingo card.
You've really been checking this
out.
In a big way.
Max Chafkin is all over it. He's on with the Elon Inc. podcast. We're going to talk to him a little later.
And if you're stressed out ahead of a lot of things, no worries. We've got how to live a stress-free financial life. Promise, there are some ways to do it.
Hey, first up, though, let's get a check on the today's trade and top business stories. Here's Charlie Pellet.
And here's what's going on. We've got 58 minutes to go until that closing bell clangs on Wall Street. With the Dow lower, the S&P, NASDAQ, they are both higher. NASDAQ 100 index also advancing right now. That index up 40 points, gain there of 0.2%. Small cap shares, though, they are moving lower. Russell 2000 trading now lower by 0.1%. We've got the S&P up 8, gain there of 0.2%. The Dow in the red, down 97, drop there of 0.2%. NASDAQ, the composite index up 38, up by about 0.3%. 10-year yield 4.14% with a 2-year 4.38% right now. We've got a spot gold up $7 the ounce, higher by 0.4%. 2028 on spot gold. West Texas Intermediate crude down 0.3%. 74.51 for a barrel of WTI. So again, the 10-year 4.14, the 2-year 4.38. Netflix will report after the close of trading, certainly one of 3 closely watched tech names this week that will include Tesla tomorrow, Intel on Thursday. Right now, we do have shares of Netflix. They are advancing now by 0.7%. Again, recapping, U.S. stocks are trading mixed. The Dow lower, S&P, NASDAQ, they are both higher. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Come fly with me, let's fly away.
All right, a little blue eyes for everybody. Gotta say, just love that.
He wasn't being packed into seats in economy class.
No, I'm sure.
No
he
peanuts,
wasn't.
no blankets.
He was hanging with the Rat Pack over
Yeah,
Vegas.
they had their own plane.
Yeah,
I
exactly.
think they had their own plane.
Talking about flying, we are seeing shares of airlines flying today. I'm looking at the S&P Super Composite Airline Sub-Industry Index. It's up almost 4%. If I look at it, I think there are 9 members. All 9 are higher today, Tim.
Yeah, here's why. United Airlines profit poised to beat Wall Street expectations this year as the carrier works to overcome the cost from a grounding of certain Boeing 737 MAX planes. The airline's full-year forecast suggests a sharp turnaround after this quarter when United expects an adjusted loss of 35 to 85 cents a share. It would fall well short of the average 21-cent loss that was estimated by analysts.
All right, so let's get to it. Back with us is Bloomberg Intelligence Senior Aerospace Defense and Airlines Analyst George Ferguson. He's on the phone in New Jersey. I got to say, hardest working dude in the last week or so, thanks to all of the airline news, the Boeing news. But let's go to United, George. All about the outlook here?
Yeah, I really think it was. Results were very, very similar to Delta. Where we saw some softness in the domestic market. Latin markets very soft from a fare perspective. Atlantic looked really good, just like Delta. Pacific looked okay, and so the revenue story was very, very similar. But yes, the whole discussion, in the back half of the call, I think was a lot of analysts trying to figure out why United thinks things are going to get so much better after what, a rough 1Q. And it's all about, fares and what they think the market environment. Some of it's United too, right? There's changes going on at United. They're increasing the size of some of the airplanes they're flying in the domestic market. They can offer more premium that way. So they're talking about how that brings in a higher price point. So some of it's United specific, but it's a lot of, they see the market as being firmer than I think we all thought when we heard from Delta.
We'll talk a little bit more about the contrast between United and Delta here. What is United doing differently? What's different that they see? Why is it working for United but not working for Delta? Well,
I think part of this is that United is trying to become more like Delta. So as they sort of narrow that gap, that would make United a better revenue generator, because really I think one of the ways Delta stands out in the marketplace is their ability to attract premium passengers and sell those premium seats. And I think their loyalty program is quite good, and I think that really helps them from a revenue generating standpoint. And again, United changing some of the airplanes that they're flying in the domestic market lets them offer more of that premium seating, and they're telling us a story, a narrative that is they're getting more and more like Delta, even though I don't think they ever mentioned Delta. They said like another airline in the marketplace. They're getting more premium, they're telling us.
So help me out here, because Tim and I just talked about a story that's on the Bloomberg about no-frills flying emerging as travel's painful, greener future kind of moves forward. So this whole idea of the low-cost carriers, people giving, smaller seats, not putting a lot of stuff on the planes to reduce weight, to reduce their costs, but it also means they fly more efficiently and reduce their carbon footprint. Isn't that something that all of these carriers, they still need to be thinking about? Like when I hear you say they're offering more premium seats, that to me says more room, bigger, cushier seats, more weight. So help me.
But also more expensive.
And more expensive. But help me make sense of it. Like, don't they have goals that they've got to hit?
Yeah, that's one of the challenges of this business, right? And you're right. There's no more fuel-efficient airplane than one where we're all jammed in there like sardines. Might not even have a bathroom in it or something like that, right? We minimize the amount of weight excess weight we're carrying. But it seems to me that when people go places, if they have a little extra money in their wallet, they often like a little extra space to stretch out in.
Yeah.
And so, even the greenest people seem to like, to be comfortable when they're in a tube for 5 or 6 hours. The airlines, though, one of the big challenges in the industry right now is where do we go to that greener future? And a lot of time when I hear them talk about fuel efficiency, they'll talk about the airplane's kind of per trip fuel efficiency improvements, and that way we all don't have to feel as bad about whatever seat we're buying. And there's a lot of discussion about SAF, right? I think the next wave, that we're going to get of the greener airline future will be sustainable aviation fuel, and the airlines have committed to buying it. There's another big challenge there because there's almost no SAF production in the world right now, but the airlines have told us they're going to buy it, so we should feel better about it because it's going to be greener.
How can you buy it if there's no production of it?
Yeah, I'm being a little facetious, but there's little to none. I mean, it can't even cover.
Also,
can't cover 5%.
What is sustainable? What does sustainable aviation fuel mean? Like, how is fuel sustainable?
Now you ask me the hard questions, right?
It just seems like it's like an oxymoron, right?
So as I understand it, some of them can be generated from like grains and grasses. Others can be generated from like fats and food. That United has that Oscar. Is it Oscar? Who was the guy on Sesame Street that was the garbage guy?
Oscar the Grouch.
Oscar. Yeah, Oscar. He's their spokesman for, I guess, for their SAF. But again, not much of it in the world, so they can't even meet multiple percentages of their operations with it.
And here's a stat. I'm just looking. The International Air Transport Association says that they estimate that sustainable aviation fuel could contribute around 65% of the reduction in emissions needed by aviation to reach net zero in 2050. I mean, they've got, no pun intended, a long runway, though, on this, right?
Aviation does. It's a real challenge.
Yeah.
Sorry,
well, Jordan, I was just going to say, I'm just looking forward to flying on a plane and it smelling like French fries all the time. If they're,
You're just looking forward to flying and eating those French
using
fries.
cooking oil.
It might not be French fries. It might be the fat from around a steak. I don't know.
Yeah, it's not so bad either.
Hey, listen, going back to all right, we're going to get back on track here. Well, I'm curious, is there a Jamie Dimon or JP Morgan in the airline industry? You know what I mean? A voice, a company that is above the rest, sets the tone.
I hate to call any of those guys out that way, but look, I think that Ed Bastian has done a nice job at Delta of trying to, be sort of the voice of the industry, and maybe that's because Delta looks like the leader in the industry, one of the more profitable ones. I think he's been one of them, and certainly Scott Kirby, United, is trying to do a similar thing. But I would say, Ed Bastian probably has a little more of the pulpit right now, maybe. Way to say it.
Okay, well, speaking of United, I want to talk a little bit about what else we learned on the company's call. We're learning that United is no longer counting on Boeing's largest 737 MAX model as the plane maker's manufacturing miscues threaten to further delay an aircraft already years behind schedule. We learned this thanks to an interview with Scott Kirby earlier on CNBC that said that the carrier hasn't canceled its order. United has removed it from its internal plans. How does a airline do this when pilots are trained on certain equipment and when the infrastructure is set up for that equipment?
Yeah, I mean, the MAX models, basically the pilots have the same type rating and can fly the different MAX models. They can fly the MAX 8, the MAX 9, the MAX 10, the MAX 7. The 7 and 10 still aren't certified. As I heard that discussion, I think a lot of it was really around they're removing it from their plan for right now, but they still want the airplane. It's going to get pushed out. There was a lot of discussion about CapEx expenditures, too, for United, because United has one of the more aggressive fleet plans, adding a lot of airplanes, that knocks down either cash or requires debt to financing it. I think the analyst community questioning that a little bit, right? They also want a fair amount of free cash flow to feel good about the shares. And so I think that was part of CapEx isn't going to be as high as you all think it's going to be. Relax. But they still want it.
But it also sounds like he's, when they're reconsidering, we're thinking like at all this thing. I mean, it sounds like Kirby's kind of like, hey, folks, you got to get your act together. Like, right?
I mean, don't they know that?
I think they do know that, yeah. And he as much as maybe he's doing a little bit of that, he also said, Boeing's a great company that has done some, wonderful engineering achievements. I'm not quoting him directly, but things along those lines. So he had a little bit of salve for that, for that discussion too. I just think it's probably hard to put that on, on a schedule for when those airplanes are going to show up, given where the industry is right now, and especially Boeing. And so I think he was crying uncle a little bit on that, and they will figure it out when it's ready to come.
And Boeing, Stan Deal, Boeing's commercial airplanes chief, apologized following Kirby's interview. We have let down our airline customers. We are deeply sorry for the significant disruption to them, their employees, and their passengers. He put that out in his statement. Having said that, and Tim and I have talked with you about this, George, I mean, no offense, but these big major carriers don't have a lot of other options in terms of where they're going to buy their planes, at least not right now.
Nope, there's only two, Boeing and Airbus. And one of the other items to think about is there are training costs, right, for the maintenance people that maintain the airplanes, for the pilots that fly them. And so you don't want to have, sort of a scattershot fleet, right? You like to have some commonality there. It saves you costs. United's already sort of down the road with Boeing. And so it would be really hard to turn that into an Airbus shop. It's not that they don't have any Airbus, but they've done a lot of orders from Boeing. I think they got some great prices from Boeing because they kind of came in, right after the pandemic, as the Chinese weren't taking deliveries, still not taking deliveries out of China. Boeing needed a customer. They sold a bunch to United. United's taking a lot of deliveries every month as we watch them. So that's a really, really important customer to Boeing. But at the same time, it'd be really hard, I think, for United to walk away.
Where does it leave a company like Southwest that exclusively has a fleet of 737s? They literally have no choice, right?
Yeah. I mean, and that's one of the things we watch kind of constantly is, we're concerned about the quality of Boeing. If we saw like a Ryanair or a Southwest that has a pure fleet of Boeing, or an Alaska or a Copa, if we saw one of them leave, that would be a really, really, really bad sign. So we watch that very closely for those core customers.
That would be a bad sign because it would be the switching costs are so high, George. You mentioned retraining pilots. Yep. You need to retrain every pilot to fly Airbus equipment. The maintenance, parts, the list goes on. That's how these discount carriers do keep costs low. They have the exact same equipment. So these planes are interchangeable no matter where they are.
Exactly.
Hey, American, JetBlue, Southwest report later this month. I don't know if I'm leaving. I'm sure I'm leaving some folks out. What are you what's on your radar here?
Yeah, so we're watching domestic fares very closely. They matter a lot more to the low-cost carriers because they just don't do overseas, right? I told you Atlantic, transatlantic was so strong. They won't have that in their profit statement. So we'll watch very closely to see what the state of basic economy is. Because, to us, it feels like the story we got from United today and part of the results we think we saw at Delta 2 is that maybe there's not a lot of premium seating in the marketplace. There has to be a lot of discounting. But there is a lot of basic economy seats in the domestic market. So we'll watch those. Again, we'll watch those yields very closely. And we're going to see a similar story at these other airlines, too, that's going to be the high cost of labor is really taking a bite out of the income statement. And the challenge, again, for the carriers that only have domestic business and fares are falling harder there, it'll be really hard to maintain profitability, having given so much to the pilot.
And in the last minute George, we have about 60 seconds left. Where does it leave Boeing? What are you watching for next with Boeing and getting the MAX 9 back in the skies?
Well, I think that is it, right? There are discussions with the FAA, how much the FAA wants to get together with Boeing and really get in place an inspection program so they can get the MAX 9 up. And then we want to hear from Boeing what they're going to do in the factory to stabilize production, because clearly there's just not either enough oversight or training inside their factories and the suppliers. We want to hear about that.
All right, we're going to leave it there. Hey, thank you so much. Really appreciate it. As always, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson on the phone in New Jersey. Looking at the S&P Supercomposite Airlines Sub-Industry Index.
Say that 5 times fast. How dare you?
That would be tough. At its highs today, up 5.6%. Wow. Right now, still up just shy of 4%. And as I said, 9 names in the index. Every one of them is up. UAL up 6.4%. Looking at Delta's up almost 3%. American up 3.4%. Southwest up 3.6%. What is this one?
Which one?
Sun Country.
Yeah, Sun Country, a regional out of the Midwest.
Up 4.6%. Told you, across the board. All right, stick around, everybody. Bloomberg Business Week continuing on this Tuesday. This is Bloomberg.
hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, the S&P, NASDAQ 100 index, all pushing higher. Mixed market right now. Stocks stuck in a narrow range. S&P little changed after starting off the week at a record. Could see another record close today for the S&P, up 13 right now at 48.64. That is a gain now of 0.3%. The Dow lower by 73, down 0.2. NASDAQ up 57, a gain there of 0.4%. Russell 2000 now flat on the day. We've got the 10-year 4.13% with a 2-year that's yielding 4.38%. Gold up 0.4%, 2,028 the ounce on spot gold, while West Texas Intermediate crude down 0.4%, 74.49 for a barrel of WTI. Katie Kaminsky is chief research strategist at Alpha Simplex Group. She says investors have been reassessing their views on rate cuts.
What we've seen this month is people capitulating a little bit and saying, you know, it's actually not that easy to get inflation down that quickly. It's going to take more time. That doesn't mean we're not in the right path. It just means that this disinflation hope is not really sort of going to happen in a month. It's going to take 3, 6, a few months for them to actually capitulate, for the Fed to also capitulate and say, you know, it's time to make cuts.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Halliburton has joined rival Schlumberger in boosting its quarterly dividend as the world's biggest oil field contractors gear up for an international boom amid slowing shale work. Halliburton up now by 2.3%, Schlumberger lower by 0.2%. After the bell, we will be hearing from Netflix. Again, recapping stocks, a little change right now. S&P up 12, up by less than 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, it's time for another edition of Bloomberg Plugged In. It's your weekly look at EVs. And speaking of EVs, some huge news coming from our own Mark Gurman this afternoon. Apple pivoting to a less ambitious design with the intent of finally bringing an EV to market. So after previously envisioning a truly driverless car, the company now working on an EV with more limited features. That's according to people with knowledge of the project. For more, let's bring in Ed Ludlow, the co-host of Bloomberg Technology on Bloomberg Television. He joins us now from our San Francisco bureau. Ed, some big news from Mark earlier in the day today. It's not just the fact that Apple is pivoting here. The date that this thing could actually come out is actually slipping also. What do we know?
Yeah, I look at it as Apple scaling back its near-term ambition, both on the product and what the product will or won't be, but also when they can deliver it. So, you know, a big piece of news is that the Apple Car, which we don't really know much about, is now likely to launch in 2028, as opposed to the previous target of 2026. And when it comes to the product, you know, they've been working on this for a decade, and the original hope was an all-singing, all-dancing premium electric vehicle that had a very high degree of autonomous driving. Now it seems, according to Mark's reporting and sources, that we're talking about level 2+, which is something akin to what Tesla's autopilot can already do today. So a real scaling back of the experiential and technological ambition for that product.
All right. If you're just waking up from, like, I don't know, a 50-year sleep, and you're like, or, you know, let's be more realistic. How old is Apple as a company? 30 years? How old is Apple? Yeah, 30. So maybe you're, like, waking up from a 25-year-ish sleep or something, and you're like, Apple making cars? I still kind of try to get my head around this, Ed. Why it's so important? Is this part of, like, being in, you know, the Apple system, the Apple infrastructure? Does this just make it even more, I don't know, prominent? Help me out here. Every time
It's a completely reasonable question. I mean, an important piece of reporting is why this all came about. And if you read Mark Gurman's story, it's that the board sat down with Kevin Lynch, who's the executive that leads the Apple Car program, along with his responsibilities with the watch, and Tim Cook, and said, hey, show me some progress here, because they've been working on this since 2014. The kind of philosophical or big picture idea is that the car is where you spend so much of your time. You interact with the car for so much of your day in the same way you had that relationship with your smartphone. And it would be a new product category for Apple. And they feel like on the battery technology side, the UX side, interacting with the car in the cockpit, and the technology that goes into a modern day car, they want a piece of that market. And as Mark writes in the story, in Apple's case, we're talking probably about a $100,000 vehicle. And they may not make any profit on that for years and years and years, but this is Apple we're talking about. They're good at selling stuff, expensive stuff, at scale, around the world. And so they're interested to get in on the automotive space too.
Guys, I have some bad news. We're getting old. Apple's almost 50 years old.
It's 50 years old.
47 years old,
All right.
1976.
So you fell asleep 30 years ago, 25 years ago, and you woke up today and you're like, what, Apple car?
Yeah.
It still works.
Okay, it's a good point.
The iPhone's been out for what, 10 years, 12 years? What is it now?
Yeah. Well, Ed, you report on technology. You're the co-host of Bloomberg Technology each day on Bloomberg Television at 11. So you also report a lot on cars. So these are both. This is like your world meeting. Given what's happening with EVs right now and what's going on with the appetite for EVs, how do you think Apple sort of plays in this space? Is it? I mean, look, we're totally doing conjecture here because, like as you said, this is 2028. It's years off. But are we thinking about this like a premium product category, like all of other Apple's products? Like, what does that look like for a car?
Well, I don't know that it's conjecture in the sense that, Apple's vision of the world was a place very similar to what Waymo is working on right now with autonomous driving fleets, right? That in the future, whatever that may be, 2028 or otherwise, we may not need to drive our vehicles. We don't need to have a steering wheel with our hands on it constantly. And that puts more emphasis on what it's like to be a passenger in the car. Maybe you're on your way to work. Maybe you are doing the school run, whatever it is, and you're making best use of your time while you're in that vehicle because you don't need to be paying attention to the road. That was what Apple's goal was, this premium EV where there was a high degree of autonomous driving, the car would drive itself, and you're surrounded by high spec and you can get on with things. But bringing that to market, as we know, not just from Apple, but the Teslas of this world with full self-driving beta, the German automakers, Cruise, which is kind of really suffering right now in the purpose-built autonomous shuttle space. It's so hard. It's so hard to do it. And so Apple is caught in that story and is paring back because ultimately they put a lot of money and time into this project. They've had a lot of chiefs, a lot of talent coming in and out the door. And now they're basically saying, according to Mark's reporting, but also what I heard too, it's just like, we need something tangible, guys, at some point. So let's make it a bit more simple.
And, it can't be ignored, these big tech giants, right, who have, impacted our world so much, whether it's Alphabet, whether it's Apple, whether it's Amazon. They all are, in that transportation space. They're trying to figure out kind of what's the next level way we get around. So there's, it's hard not to kind of say there's got to be something to it. There's a lot of smart people who are working on this.
Well, look, I'm a big user myself of Apple CarPlay. For my sins, I drive a combustion engine car and I connect my phone via short-distance Wi-Fi and Bluetooth to use Apple CarPlay. It's a great piece of software. So Apple's already in the car market in that sense, but then think about their footprint as a global manufacturer of consumer electronics and their command of a vertically integrated supply chain. That is kind of the thinking here as well, that if Apple can make many millions of iPhones, would they be able to put that same process into the context of a car?
Yeah.
So, Ed, you mentioned that for your sins, you're driving an internal combustion engine.
You and me too.
I got to tell you,
not by choice.
The Toyota chairman doesn't think you're so wrong because he believes that electric battery EVs are going to reach at most 30% market share. The rest is going to be taken up by hybrids, hydrogen fuel cells, and fuel-burning cars. So is that idea of an all-EV future looking more and more less likely?
Toyota is so important, and we're paying attention to this story because Toyota sells 10 million cars a year. Tesla sold 1.8 million battery electric cars last year. Toyota sold 10 million with all kinds of powertrains. And what the Toyota chairman is saying is it's not 30% next year or the year after. He's saying full stop. They see a world where long into the future, you have battery electric, you have plug-in hybrid, you have hydrogen, and you have combustion engine cars. And a really big thing they're leaning on, which I think we probably lose sight of in this country, given how blessed we are to live in a country like America, there are 1 billion people around the world who don't have any access to electricity. So how can one have an electric vehicle without anywhere to plug it in? And so that's the kind of future that he envisages here.
Yeah, no, it's interesting, right? And I think about the conversations that we've had over the last year, especially with, the pickup in hybrid sales. Who'd have thunk, right? We kind of thought that was in the past, but yet we see it playing out. A fascinating story, both of them, to be quite honest, in this ever-evolving world when it comes to the automotive space. Yeah, interesting. Ed, you're amazing. Thank you. Apple car.
Also, Ed, you got a fancy car, like a kind of a new car, if you can do the wireless CarPlay.
I think I've disclosed it on X, formerly known as Twitter, but I drive a 2022 Tiguan. And at that time, I tried to buy an electric vehicle, but this was when you had to wait 6 months for a Model Y or 6 months for a ID4. And so that's what we got because we need a car to get around the Bay.
Wow. How times have changed in less than 2 years.
Exactly.
It's crazy. You need a car when you need a car.
You need a car, yeah, especially.
Wireless CarPlay is great, though. I'm still full on wired, Carol. We got to plug our iPhone in to get CarPlay working.
Yeah, I know. We got a mixture in our cars. All right, Ed Ludlow, thank you. We're going to let you go. Ed Ludlow, co-host of Bloomberg Technology on Bloomberg Television from our San Francisco bureau.
Hey, let's go from San Francisco down to Washington, D.C. for a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nance.
Hey, Tim. Voters in New Hampshire are casting their ballots in the state primary. Sarah Barley is defending her choice.
I voted for Nikki Haley today. I will do anything to not vote for Donald Trump.
Jennifer Gange lives in Tilton, New Hampshire.
I'm voting Trump no matter what. I don't know if I'm going to vote if he doesn't make it.
Both spoke with ABC News. Former President Trump had a substantial lead in the polls going into today's primary. Ukraine aid is being held up in Congress, so Defense Secretary Lloyd Austin is making a plea for other countries to step up. He addressed the Ukraine contact group of 50 nations to dig deep and support Ukrainian President Volodymyr Zelensky's forces in their battle with Russia. He also took a swipe at Vladimir Putin.
Putin continues to sacrifice staggering numbers of Russian troops in his rash and reckless war of choice.
Today's video link address from Austin was his first public appearance since a 2-week hospitalization that provoked criticism from the White House and Congress over the failure to disclose details of his illness. Harvard University's legal bills are mounting. Those familiar with the matter say the embattled school has added King and Spalding to its legal team for 2 probes, one by the House Education Committee and the Workforce Committee. The lawmakers are investigating anti-Semitism on campus, as well as the university's handling of plagiarism allegations against Claudine Gay, who stepped down as Harvard president on January 2nd. It's been another day of disruptions on the New York subway after someone was struck by a train. Today's incident happened along the B line in Brooklyn. Police are investigating. Yesterday, a person was hit by a train in Manhattan on the same day that the Metropolitan Transportation Authority installed its first yellow platform barriers to protect people from falling. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a mixed market right now with the Dow lower, the S&P, NASDAQ. They are both higher. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed as 3M takes the Dow lower. The Dow is currently down 111 points. S&Ps are higher by 9, while NASDAQ climbs by 43. The U.S. 10-year yield at 4.14%. Gold is up 7, oil trading in the red, but Bitcoin is down by 1.4%. Among the main 11 S&P sectors, leaders were consumer staples and telecom. Real estate was under pressure, and leaders to the upside in the Dow, Verizon and Procter & Gamble, while 3M did fall as much as 13%. That's the most since 2019. Also after earnings, United Airlines rose 6%. D.R. Horton fell 9%. And in other news, Apple Car release date slips to 2028 from its previous 2026 target. Wrapping things up, Netflix reports after the bell. Live from the first breaking news desk, on Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. Let's get to it. Our Drive to the Close guest. Back with us is founder and CEO of Verdance Capital Advisors, Leo Kelly. He's here in our Bloomberg Interactive Broker studio. Great to have you here with us. I don't think we've said Happy New Year yet, have we?
Happy New Year.
Happy New
It's
Year.
not too late.
Box checked.
Check.
You got,
Hey,
Carol, you got 7 more days.
7 more
8
days.
more
I can
days.
still do it. How are you looking at the new year?
Well, I think you have to look at the new year this year, and you have to put the last 6 weeks of last year in perspective. I think that's probably the best way to approach the new year.
Meaning what?
Well, that run at the end of the year was pretty extraordinary.
Yep.
And I think the optimists won. I think seasonality won. And what tends to happen in a moment like that, first quarter tends to be one that sets it back and puts it back in place. And so I think we're trying to be level-headed in the first quarter. Look at allocations, rebalance, get portfolios back to neutral, and not get overzealous with the enthusiasm that I think might be a little bit overzealous.
Well, we're already up 1.9% year to date on the S&P 500. This will be the 3rd day in a row of a record close if we close in the green today. You talked about holding cash last time you were on with
Early
us.
November, yeah.
Yeah, it wasn't that long ago.
Are you still?
Yeah, are you still?
Did you hold on to that cash?
Well, the 7 stocks are up 1.9%. Again,
Well, we have seen a broadening out. To be fair, we've done a lot of research, in terms of if you look at a lot of the names that we've seen a broadening out in terms of the rally or stocks taking out like 52-week highs. So we've seen that happen.
Yeah, I think so. This year it's not as broad. And the start to this year. But take a step back and say, last year the S&P 500 up over 20%, great year. Same 500 stocks equal weighted were only up 12. So while it did broaden out, it didn't catch up. And so there is still room there. Now, to answer your question, we were equal weight equity, meaning we weren't overweight equity. We did have cash, but that was in lieu of fixed income elements. Okay. Let's face it. There's no spreads in the high yield market, so it doesn't pay to take risk there. We extended duration earlier in the year when everything went up to 5%. As things pull back, it doesn't make any sense in our view to hold long bonds right now. We're equal weight on equities. We're pulling back on the growth because this is starting to run. And dare I say, there's an AI bubble brewing. Right? We're not there. That takes.
Are you saying there's an AI bubble brewing?
I think bubbles are 3 phases, and I think we're getting into phase 2 right now, where the enthusiasm is starting to pick up steam. you're starting to see folks invest in the return of the asset more than the asset itself. And that's when things start to get really heated. The challenge there is you never really know how high it can go. And so having exposure is good. We're in the markets. We're neutral weighted on equity. We're just not chasing right now. And I think that's where investors have to be smart. Don't chase this thing. Be disciplined.
So in terms of, can I ask you, did you guys miss out though, in terms of your call in November? On the rally, the run-up?
No, we did great. Our equities had a great year. Our portfolios did fine. As I said, we never went underweight equity.
Okay.
Right? We were equal weight in all of our portfolios. We also have a large private equity allocation, and we've owned private credit before it became this fashion, in vogue asset class.
It's been around for a long time.
Yeah, so we've done really well with that. Our portfolios did fine. We did not miss out. I guess you could say if we missed out on anything, it wasn't massively overweighting 7 stocks that made the market look a little bit better than it was. I think if you're honest about the market last year, other than a few stocks, it was a pretty lousy year through October. The last 6 weeks saved this market, and everybody feels great about last year. It's a 6-week year, and that's seasonal, right? That's the Santa Claus rally that we see. The market followed a very consistent pattern.
And just regaining ground that was lost. No, I get it.
Well, what it did was
the momentum can mean something because we are expecting a very different Fed, and we've only got about 30 or 40 seconds left. But if the Fed starts to cut rates, does that change your thinking about kind of an equity move?
We're still like equity, and we will continue to be equal weight. What we're not doing is chasing. We're not running after growth. I do think the market is ahead of itself on Fed cuts. Asset prices are reaching all-time highs. The economy is gaining some strength. We got high consumer confidence. The Fed's going to get dovish. That's not logical to us. So maybe it cuts. Remember, we're just above neutrality. So yeah, maybe a cut, maybe 2, but this 6 cuts and we're going down back to where we were, not happening.
Either way, it sounds like it's going to be an interesting year. We look forward to checking back with you as the year plays out.
Come back and hang out with us.
All right, I'll see you tomorrow.
All right, Leo Kelly.
Sounds good.
Maybe not that soon. No, I'm just kidding. Leo Kelly is founder and chief executive officer of Verdant's Capital Advisors here at our Bloomberg Interactive Broker Studio. He's going to check in too with our TV colleagues in just a moment. Having said that, we're looking at a day where we're definitely off our lows of the session. You've got an S&P 10 that's up about 11 points. You've got a Dow that's under pressure, just down about 102 points. Percentage-wise, Dow is down as much percentage-wise as the S&P 500 is up, for whatever that means. And the NASDAQ is up about 46, 47 points, up 0.3%.
Yeah, taking a look at bond yields, we're seeing bond yields higher across the curve, except at the front end when they're down about 1 basis point on the 2-year at 437. 30-year up to 437. Oh, look at that, 438 now on the 2-year, when I said that. And the 10-year up to about 414, let's call it.
Yeah, and that 2-year yield rolling over a little bit. We saw some higher levels earlier today. Having said that, I'm looking at, the S&P 500. No, not yet.
Okay.
Major industry groups. And you've got more in the green today. Consumer staples, communication services, materials, energy names, information technology. Those are among your top gainers, but it's really consumer staples that are really leading the pack. They're up about 1% as a group overall.
Okay, I'm sorry, I jumped the gun.
Go to Netflix. Go.
I'm on Netflix. Company set to report fourth quarter results after the markets close. Count down about 11 minutes to that. Analysts on average are expecting the company to beat its own forecast for subscriber growth of about 8.76 million. Wall Street's also more upbeat on sales, Carol, predicting 11% growth. It would be the fastest growth in 2 years and comes after strong fourth quarter programming slate, growth in advertising sales, and progress on efforts to kill that account sharing.
It's going to be very interesting. I mean, Netflix is up about 0.9%. It was up as much as 1.7%. Yeah, we care about earnings, but we also care about, I feel like they front run. Is that even a word? Front run? No, front ran?
Front ran.
Kind of earnings today when they came out earlier this morning and said they're going to pay $5 billion.
This is such a big deal.
For Raw from WW.
This is such a big deal because it's live programming.
Yeah, 10-year deal.
Netflix isn't supposed to do live programming. They're not supposed to do advertising.
Except if you think
they're not
about
supposed
it,
to do games and sports. They're doing all those things.
Didn't we? Wait, haven't we been here before?
We've totally been here before. Are they turning into cable? Is that what you're saying? Is that what you're saying?
Traditional linear television, like destination viewing. I got to watch it this time. We got a lot to talk about when it comes to Netflix. All right, stick around, everybody. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are minutes away from the latest numbers out of Netflix. Geetha Raghunathan covers the streaming giant for Bloomberg Intelligence. She says it should be back on track when it comes to subscriber growth.
There are two major initiatives that Netflix has kind of rolled out over the past few months that should boost subscriber growth. One is, of course, they introduced a new advertising tier, and then they started cracking down on password sharing. So all of the freeloaders, they ultimately have to start paying up. So we are expecting about 9 million new subscribers just in the fourth quarter. That's what the company actually kind of guided to, more or less.
And Bloomberg Intelligence media analyst Geetha Raghunathan says that would put Netflix on track for 25 million new subscribers for the full year. Look for those numbers coming up in minutes. We'll be all over the Netflix earnings when those numbers break on the Bloomberg. Verizon Communications, speaking of subscribers, added new retail mobile customers for the first time after 3 down quarters, a positive sign for the mobile giant's consumer unit, which does generate most of the company's revenue. Now ahead of, or actually after earnings from Verizon, the stock is up now by 6.4%. RTX is forecasting 2024 profit that topped Wall Street expectations as the aerospace and defense giant ramps up work on a costly recall of its top-selling jet engine. RTX up now by just about 5%. General Electric is predicting profit this quarter will fall short of Wall Street's expectations as the manufacturer continues to see a disparity between its growing aerospace operations and a recovering energy business. Those are our top company stories at this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left in today's trading session. We're going to head over to our TV colleagues, wrap up the day. We're also going to be breaking down those Netflix earnings. They will cross in just a few minutes. Meanwhile, another airline story. We did a great deep dive with George Ferguson. If you want to know, too, about like fuels in the future for airlines.
Sustainable aviation fuel, SAF.
I love that we went there.
SAF.
That was really cool.
Yeah, really cool stuff.
Check it out on our podcast feed.
Okay, so like you
Yes.
said, another story when it comes to airlines. This one with a labor angle. More than 21,000 Southwest Airlines flight attendants in the Transport Workers Union of America voted to authorize a strike for the first time in their history.
Yeah, big time there. And they said if the local and Southwest Airlines cannot reach an agreement in federal mediation, the union could request to be released into a 30-day cooling off period, after which flight attendants would be free to strike. So we've seen a society here in the U.S. and workers in the U.S. who are stepping up to go on strike. We've seen that happen after a long time of labor unions and their might, if you will, really waning for a long time, but we've really seen it come back, I feel like, with a bit of a vengeance in the last year or two.
Okay, I'm looking at the press release that's announcing...
In a tight labor market, it kind of makes sense.
Yeah, that's announcing this. Here's what the union is looking for. Scheduling for on-call rotations, appropriate compensation for ground time, improved commuter policies, and the ability to have a safe place to sleep on overnights are among the contract improvements flight attendants need to see for their new contract. That's according to Lynn Montgomery, president of TWU Local 556 and a career flight attendant.
I want to know more about having a safe place to sleep, because what that means. I do wonder, like, how much pressure is to like sleep in a cheap place, right?
Or stay at the airport.
Or stay at the airport.
I don't know. I don't know how it works.
I don't know. But a cheap place, is it a cheap hotel? Maybe not in a great neighborhood. I don't know.
I have no idea.
I'm just speculating.
Yeah.
But that to me was a phrase that kind of caught my attention.
Yeah, same with me.
All right, airlines, folks. Anyway,
they're on a tear today.
If you they're on a tear. Still up about 3% here, off their highs of the session, but a lot of it has to do with what we got from United, in particular their outlook. And so we wonder whether or not that will carry over to the other carriers that will be reporting in the next week or so. So we'll be on the watch for that. We know Delta was a very different story about a week and a half ago.
Yeah.
But United certainly giving a boost and juice to the sector today.
And of course, there's the whole Boeing angle as well.
Yeah.
United CEO weighing in on that a little earlier today too.
Where do you go if you're a major carrier? Really, two major places to buy airplanes.
Pilots used to say, if it's not Boeing, I'm not going. They did.
Really?
Yeah.
All right, stick around. We're going over to the markets. Beyond the Bell starts now.
here on the day. Netflix, a modest bid as well. Netflix earnings right now crossing the wire. Let's get right to it here. In after hours trading, the headline number coming in the fourth quarter, streaming paid net change in subscribers, 13.12 million. Net subscribers added in the fourth quarter. The street was looking for 8.91 million. So that's a huge beat on the streaming side. As far as the actual dollar figures goes, EPS in the fourth quarter, $2.11 a share. The street was looking for $2.19. So a miss on that number. Revenue coming in at $8.83 billion, a slight beat over street estimates of $8.7 billion. Here's your forecast going forward. For the first quarter, the company is projecting EPS of 4.49 and change. The street was looking for, on average, guys, $4.09.
Wow, it's really good. You're looking at the stock kind of pop after hours as also trying to settle out here, but we're up over 5% at this point. What I'm also super interested in, the operating margin came in at 24%. The estimate was for 22.7%. So if you were worried about content spend, maybe you're not as worried about it right at this moment, Carol.
Yeah, and it's interesting, as you said, the stock was popping around a little bit right after the results. Right now it's up about 6.7%, 7% here. So Scarlett, we're seeing investors certainly buy into it, and they like what they've heard, at least initially.
All right, we also have earnings coming out from Texas Instruments, the chip maker. And what we can tell you is that fourth quarter revenue, trailing analyst estimates, $4.08 billion. Analysts were looking for $4.13 billion. So this is yet another quarter of revenue declines. When it comes to the first quarter revenue forecast, that too misses analyst estimates, $3.45 billion to $3.75 billion. The consensus was above $4.09 billion. So this would mark the sixth straight quarter of revenue declines for Texas Instruments when you include that outlook. When it comes to the bottom line, fourth quarter EPS was $1.49 versus $2.13 last year. And fourth quarter CapEx was just shy of what analysts had been anticipating, $1.15 billion. Texas Instruments says it sees increasing weakness across the industrial sector. And that's similar to what it had said last quarter.
It also says sequential decline in automotive, which is kind of interesting.
So that really, I'm looking at the press release right now, increasing weakness across industrial and a sequential decline when it comes to automotive. I mean, that's kind of like what we saw, Romaine, with Mobileye, right? They were talking, Mobileye got hit really hard earlier this year because of a decline in the automotive business. I mean,
yeah, and we kind of saw this coming too when we got some of those auto sales data at the start of the year, the start of January. It was very clear that we're seeing a material slowdown, not just in EV sales, but really in auto sales overall here. This is the bread and butter for a lot of these companies in terms of, at least in terms of profitability. And so if that's waning here, you have to adjust that model pretty significantly to the downside.
Yeah, looking a little bit at that fourth quarter, I'm going to go back to Netflix, or stay with Netflix for a moment. Looking at their fourth quarter letter to shareholders, they say there's plenty of room for growth ahead as streaming expands. They just talk about, entertainment, improving Netflix faster than their competition. So they seem pretty upbeat, and it certainly looks like investors feel the same way about Netflix here in the after hours. Stock still up almost 7% or at 7% here.
Yeah, I think it's worth, though, going over for a second. Streaming paid memberships.
It's
over
well,
260 million.
Yeah.
I mean, that is a big, big number. Also, I just to point out the content spend is actually up about 17. I just had the number and then it went away. 17.
They're moving quick on the
billion.
terminal.
I mean, they're definitely doing it. Like they're definitely spending the money.
Well, hang on. That 17 billion though is actually below where they've been for a while. Remember, they ratcheted that down. Yeah, it's better in terms of obviously from a cost perspective. But I mean, I hate to poo-poo this, but at the same time, like, where's that content going to come from? I mean, we were speaking with Alicia Reese over at Wedbush earlier,
WWE,
and she was she was very bullish on this WWE deal and saying that the cost structure of that, particularly given the ad component that's baked into that, might actually be the new model. You overlay that with the resignation that we learned about yesterday of Scott Stuber, who headed the film division, and maybe that is the future here.
But it's also going to come from games. I mean, these are all places where a few years ago you spoke to anyone.
Yeah, yeah, that's a new part of the business.
Here's what they said. Here's what they said in the letter. With a better slate, easier discovery, more fandom.
Single guys.
Establishing ourselves in new areas like advertising and games, we believe we have a lot more room to grow. It's a $600 billion opportunity, revenue market across pay TV, film, games and branded advertising. And today, Netflix accounts for only roughly 5% of that addressable market. I mean, if you were to go back in time and show this to someone 5 years ago and say Netflix would get into sports, Netflix would get into live, Netflix would get into WWE games. Well, it's
live
scripted,
though. You've got to tune in at a certain time, and it goes after a different audience. Like if you think about the potential,
they did this with golf. They experimented with golf a little bit. They're doing it a little bit with tennis. So they're dabbling in sports a little bit. I mean, this is like never say never when it comes to Netflix, because the Netflix that they're building right now is so different than what they were building just a few years ago.
And remember, that's the thing. They're building their advertising tier, whereas the other streamers, they had advertising and they're trying to transition to streaming without advertising and then trying to add an ad tier on top of that, right? So Netflix is building something out of scratch, and it has only to go up from there.
All right, just to rehash, we've got Netflix up about 4.6% in the after hours. What's really key, too, is if, it seems really upbeat, the stock is rallying. We think about all these major stocks, these big names, the FANG stocks, that have really been outperforming, right? Do they, measure up to their valuation? So here's one of the first ones, right? And so I think it's just an interesting part of the market conversation about whether or not these that have really provided so much momentum to the market starting late last year, whether or not they can continue. Netflix is showing that maybe, it can.
Something else I should just mention here. The company says we're not interested in acquiring linear assets. What does that mean? Paramount?
So we don't want ABC's networks? Like, what does that mean?
CBS, ABC?
No idea. But I am curious about this idea. I mean, we're so focused on this blowout on that subscriber number here, but I mean, Netflix was the one that pivoted us away from looking at that number and wanted us to look at the profitability, and the profitability came up short. So I'm a little confused.
So does that mean that the share of subscribers are going to the advertising supported plans, Alex? Does it mean they're not upgrading to the higher, the more expensive multi-stream platforms? What does that mean?
Well, I don't think that there's enough ad sales for that to be a mover. It's such a small portion. Geeta Ranganathan of BI says that, look, if this is a $30 to $40 billion company, at some point you could see 10 to 15% of that come from ad sales for revenue, but we're not there yet, so I don't know if that's a fair comparison yet.
Well, within the statement, the company does say ad plans now account for 40% of all Netflix signups in our ads markets, wherever they have launched the ad tiers. And we're looking to retire our basic plan in some more ads countries. So that gives you a sense, where you can just stream all day long without watching commercials. At some point, that might go away.
What's interesting, too, I'm looking at the headline in our story. Netflix posts best customer gain since the surge during the pandemic. Remember, we came out of the pandemic and we're like, okay, we're out doing things, we're flying, we're going places. And yet this is showing that, they are able to bring back in customers, even though we're doing all these other things.
I also want to know how much of this has to do with them cracking down over the last 6 months or so.
You mean like your
9
brother?
months. Yeah, like my brother, who now has to get his own Netflix account rather than just mooching off the family still.
Yeah.
That's a big part of it.
Yeah, it'll be interesting to see what happens on the conference call, which they moved up a little earlier than what it would normally be. So it'll actually be starting here while we're in the hour, while we're here on Bloomberg Television. So we'll have a breakdown here of anything that Sarandos and the other folks on that have to say.
Yeah, lots of questioning. Netflix still up about 4.3%. We've got Texas Instruments, though, folks, down about 3.6%. So we'll continue to track them into tomorrow's trade. All right, that's a wrap, guys. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We will see you same time tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser.
I love looking at different things that are going on in our economy. The Fed president's kind of battled it out about what's going to happen next.
And Tim Stenovec.
Consumers are out there spending money. They have jobs. Higher for longer is what we hear from the Fed. Higher for longer is what we hear from the IMF also.
On Bloomberg Radio.
All right, everybody, you are listening to Bloomberg Business Week, as you just heard with our TV colleagues. Netflix, their earnings are out. Stock is still up in the after hours, but off its highs, still with a gain of about 3%. So let's get to a little bit more analysis.
Yeah, we got Bloomberg Intelligence Technology and Media Analyst Geeta Ranganathan on Zoom from BI headquarters. Geeta, good to have you with us. You've only had 9 minutes exactly to look at these numbers. It was a blowout number in terms of subscribers.
Easy peasy for Geeta.
What sticks out to you?
Well, what sticks out to me, apart from, of course, the subscriber blowout, is all of the financial metrics. And I think one of the things that really, really stuck out to me was the operating margin commentary. They were expecting 20% for 2023, about 23% on the higher end for 2024. Now they're expecting closer to 24% for 2024. And this goes back to your, your point that you were talking about a little while ago on profitability, right? And what we've really been concerned about across the media landscape for all of these streamers is the lack of profitability. Netflix, of course, is the only one that's profitable. Their operating margin getting even higher and higher, just telling us that not only are they able to pull a lot of levers when it comes to monetization of their existing base, getting newer subscribers on board, but then also showing extreme discipline when it comes to content costs.
Is that why we don't really care that much about the fourth quarter EPS miss? 211 versus 219 is what the street was looking for. Because I think Romain was making the point of, okay, great on the subscriber, gain, if you will. But look, they missed their numbers in the fourth quarter EPS. Is that just backwards looking? We don't care because it looks so much rosier going forward?
I think so. I mean, and they had kind of alluded to this. They said that, you are going to expect, you are going to see a little bit of bumpiness when it kind of comes to that acceleration in what they call their key metric, which is, the average revenue per member. And they're doing different things, right? They're tweaking prices a little bit here and there in order to kind of reinvigorate subscriber growth. And it's playing out differently in different markets. But I think that the bottom line here is that, free cash flow in a very good spot, almost $7 billion in 2023, and they're guiding to at least $6 billion. I think it'll come in way better than that in 2024. And then, of course, that whole revenue reacceleration story is really back in place. We saw over 12% for 4Q. We were expecting around 10 point, or they guided to around 10.7%. And then again, we're seeing further acceleration going into 1Q as well. So, definitely a lot more mojo left for this company.
We're speaking of mojo. I'm always kind of blown away by some of these companies and their free cash flow. So Netflix says sees 2024 free cash flow of about $6 billion, which is pretty much in line with the estimates. I mean, that's a pretty big number. Help me, yeah?
It is an absolutely huge number. I mean, remember, just 4 years ago, Netflix was burning $3.3 billion of cash. So all of those, investments that they kind of made in terms of original content, all of that is kind of really paying off right now. And they seem to be even taking a little bit of a step back, I would say, with, their original content investments. If you just kind of look at the profile of their content, they are saying that 45% of their most watched titles are actually licensed content. So just kind of goes to show us they don't really need to write these huge billion-dollar checks for original content anymore. They have a pretty decent pipeline. They can play it safe. They can experiment with new content, which is exactly what they're doing with that TKO deal, with the WWE content for Raw. And they can probably go and dabble more with, different kinds of content and see how it plays out, especially for their advertising ambitions.
That's what I wanted to talk to you about, because there's this part of the letter to investors that really sticks out to me, saying that if we continue to execute well and drive continuous improvement with a better slate, easier discovery, and more fandom, while establishing ourselves in new areas like advertising and games, we believe we have a lot more room to grow. They say it's a $600 billion opportunity across pay TV, film, games, and branded advertising. And Netflix today only accounts for about 5% of that addressable market. How big do you think Netflix can get when it comes to games and when it comes to linear TV? Like, the stuff that they're doing with live.
Absolutely. So I think the one thing that we've kind of seen them do really well is have this tremendous scale. Netflix has kind of become a habit for so many of us. If we kind of think about what do we want to watch, we naturally kind of almost gravitate towards Netflix. So they have this built-in base right now of 260 million subscribers across the board. And so now it's up to them to kind of add more and more content. I'm not so sure about the gaming piece, but definitely advertising. Advertising is going to be absolutely huge for them. They just now have to make sure that they're able to offer the right content that kind of really lends itself well to advertising, content that kind of really gets advertisers, more enticed to kind of come to the platform, because they obviously have they have the captive user base. So we're really going to have to see how they do with that. In terms of gaming, I mean, it's kind of been a pretty slow ramp. Yes, it definitely is a great opportunity, but again, I don't necessarily think people think of Netflix as the first kind of spot they want to go when they want to play a video game. So that might be a little bit of more of a slower ramp.
Hey, in their letter to shareholders about the fourth quarter, Geeta, they say, according to Nielsen, in the U.S. in 2023, Netflix had the #1 original TV series 48 out of 52 weeks, original film 41 out of 52 weeks, which was a significant increase, they said, on 2022, and they acquired series 44 out of 52 weeks. I mean, I know when I watch, quite honestly, I check out Netflix, I check out Apple TV, and I think I might check out Max. Like, that's kind of where I go. Having said that, you said before, 45% of the most watched on Netflix is licensed content. So does that support why they are doing this deal with WWE?
I absolutely think so. I think they have realized that, all types of content. Netflix is now just basically this destination, right? We are seeing these old shows kind of come back and find new life or find their second life on Netflix, if you will. So many of these shows that we'd kind of almost forgotten about on rival platforms, on rival networks, on rival networks are doing so well on Netflix. And they're really kind of going to try and capitalize on that. And I think that's absolutely what the Raw deal is about as well.
So how many more deals do you think we'll see like that? I mean, again, I can't emphasize this enough for people who, haven't covered Netflix for years. It's like seeing Netflix do deals like this is sort of the antithesis of what Netflix said it wanted to be, right? This idea of a place we want to turn into HBO. We are. And look, I mean, to be fair, Netflix has pivoted many times in their history.
Did you ever think you'd do radio on TV and on
TV on the radio,
streaming?
And,
I'm just right.
Yeah.
It's all changing.
No, you're right. And that's in Netflix's DNA. After all, this is the company that pioneered sending us red envelopes with DVDs inside them, and basically invented the category of on-demand streaming, Geeta. Like, this is a really big deal. This is a big transition for the company.
This is absolutely a big deal, Tim. But the good thing is they're not afraid to go back to kind of the drawing board and kind of restart everything, if you will. So, obviously we're going to see a lot more moves from them. The one thing, of course, that they did say is no linear networks for us. So I guess, nothing on the Disney front there for them. Also, probably no big studio deals. But I think the deal here with Raw definitely signals to us that they are interested in the live sports space. So we do know a lot of deals that are kind of coming up for renewal, whether it's, the NBA rights deals or whether it's UFC, a lot of other smaller kind of packages as well. And maybe Netflix is going to be a big player there.
They certainly have deep pockets. Hey, I just got about 40 seconds left here. Number one question you would put on the analyst call with Netflix?
I think absolutely want to know if they are going to release their number of ad subscribers. And again, just kind of want to get their take on what the TKO deal means and whether it's going to spawn future such deals.
Right.
Hey, wait, I have one more question. Does Netflix want a premium subscriber more than an ad tier subscriber? Like, who's the best subscriber Netflix wants?
Good question.
You'll be surprised, but the ad tier subscriber, even though they're only charging $7 per month to the subscriber, they're actually making a whole lot more from the advertising part of it. So they're actually agnostic between a premium subscriber and an ad tier subscriber because they're able to kind of charge all that extra money to the advertisers, and hopefully they'll be able to keep cranking that price up. So the ARPU is actually the same.
Advertising.
As hard as that is to believe. Yeah.
Right. Can make a lot of money.
It's old as new again.
Geeta, you rock, always. Bloomberg Intelligence Technology and Media Analyst Geeta Ranganathan on Zoom from BI headquarters in Princeton, New Jersey. That stock, by the way, Netflix, up 6.6% in the aftermarket. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A blowout quarter at Netflix. Stock right now, after hours, trading higher by just about 8.5%. Netflix, as we have been reporting, signed up 13.1 million customers in the final 3 months of 2023. The streaming giant's best quarter of growth since viewers were stuck at home in the early days of the pandemic. Geetha Raghunathan covers Netflix for Bloomberg Intelligence. She was interviewed moments ago right here on Bloomberg Business Week.
What sticks out to me, apart from, of course, the subscriber blowout, is all of the financial metrics. And I think one of the things that really stuck out to me was the operating margin commentary. They were expecting 20% for 2023, about 23% on the higher end for 2024. Now they're expecting closer to 24% for 2024.
And again, after hours, we got Netflix up now by 8.9%. Turned out to be another up day on Wall Street for the S&P 500 index. By implication, another record for the S&P, up 14 points. The S&P 500 index at 4864, a gain today of 0.3%. The Dow lower, though, by 96 points, dropped there of 0.3%. The Nasdaq Composite Index up 65, up by 0.4%. 10-year yield 4.13% with a 2-year 4.37%. Spot gold up 0.3%, 2,028 the ounce. Today we did see Bitcoin slump by 1.9%, just above 39,000 now, 39,083 on Bitcoin, and a retreat for crude down 0.3%, 74.52 a barrel. So again, an up day on Wall Street. S&P up 14, gain there of 0.4%. After hours, Netflix now just about the best level, surging by 8.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, living a stress-free financial life, it's not actually that complicated, at least according to our next guest. Here's some of the things that he says will get you there. Okay, keep roughly 20% of your net worth in cash. Don't have a joint bank account with your partner or your spouse. And if you get into Harvard or an Ivy League school, go no matter how much it costs. And if you don't get into Harvard or an Ivy League school, then think very carefully about that college.
We talk about that a lot, and I love this joint bank account. We've been talking about this a lot in the newsroom. These are all some of the strategies outlined in a new book. It's called No Worries, How to Live a Stress-Free Financial Life. We've got the author, Jared Dillon, with us. He's editor and publisher of the Daily Dirt Nap. It's a market newsletter for investment professionals. Earlier in his career, he spent 7 years trading at Lehman Brothers, if you remember that firm, and you may recognize him because he's a former Bloomberg opinion columnist. Really great person to have in here. We've been having fun with this book and talking a lot about it in the newsroom.
Okay, so I want to start with the one that's probably gotten the most controversy here in the newsroom when I share it. You have this really strange financial arrangement with your wife.
Spreadsheet?
Whom you've been married to for a very long time.
26 years.
And you are still married to her.
So apparently the spreadsheet works,
Yeah.
the strategy.
But let me tell you guys how strange this is. You own 87% of the house, and she owns 13% of the house. How is that the key to a stress-free financial life?
So typically when a man and woman get together and they get married and they combine their finances, they have joint accounts, people are still mentally keeping track of whose money is whose. They think, well, I put in $500 and I put in $300. And if somebody spends the other person's money, like in their mind, what is the other person's money, then it can lead to arguments. And you know, I've known some couples, lots of couples, that will get into knockdown, drag-out fights over $50. And the easy solution to this is just keep your money separate. Just absolutely. So when I got married in 1997, I said to my wife, I was like, we are going to keep our money separate. And she agreed. And in 26 years, we have fought about a bunch of things, but we have never fought about money. And we basically just Zelle money back and forth to each other. Like that's
You really do that?
Yeah, all the time. Like basically our deal is I pay 2/3 of the groceries because I eat 2/3 of the food. So if she pays for $120 for groceries, I'll Zelle her $80. and we do this all the time. Before Zelle, it was a little hard. We literally wrote checks back and forth to each other.
Okay, she loves you, right?
Yeah.
Okay, just making
They're
sure.
still married.
They're
still married.
I actually have somebody getting in touch right now saying, does she love him? Like, yeah, okay, so confirming. Okay, you guys are in love. Okay,
There's more
that's good.
questions we could ask, but we're not
All
going to
right.
go there. What about things like college? And I think Tim and I talk about this so much. And we had a colleague who came in the other day whose son is going to not an Ivy League. It's a small liberal arts school. It's going to cost him over $90,000 a year. And we're like, this is insane.
And typically, it's those kind of colleges are the worst deals. A liberal arts school that maybe is somewhat rigorous, but not as rigorous or hard to get into as an Ivy League school, and they don't quite have the reputational clout. The reason you will pay anything to go to someplace like Harvard, it's not because of the education. It has zero to do with the education. It has to do with the people that you're with.
The network,
the
right?
network, the connections. You are going to school with people who will be president. You will go to school with people who will be CEOs. Your Rolodex will be full of these people. Your unemployment rate will be zero. If you go to a lower tier school that costs $90,000 a year, you don't have those benefits. You're going to graduate with $300,000 in debt, and your earnings power won't be able to support the student loan payments.
Is any student loan debt okay in your view?
So what I say in the book is that you should have no more, unless you go to a top tier school, you should have no more than $40,000 in debt. And the reason that is let's
Jared,
say
have you looked at how much school costs a year?
Oh,
Even
yeah,
for
absolutely.
like, not top tier.
combination of scholarships and grants and stuff like that. If you owe more than $40,000, you have to be able to pay it off in 5 years.
Right.
If you can't pay it off in 5 years, then you should go to a cheaper school or maybe not even go at all.
And you go into detail in the book about why student debt is so troubling for so many people, and a lot of it has to do with the government and the way that the government handles those student loan payments.
Can I talk about that for a second?
Yeah, talk about it for a second. We don't have a ton of time, and there's some other stuff I want to get to, but mention that.
Income-based repayment plans are the worst thing in the world. This was passed in 2009, and basically the government means tests you and says, you don't have to pay this $1,200 payment. You can pay this $300 payment, but then the balance is added to the back end of the loan. It's negatively amortizing, and that's why you have these people that go on Twitter. They said, I borrowed $70,000. I paid my student loans for 20 years, and now I owe $100. How is this fair?
Oh, and by the way, in bankruptcy, it does not get erased.
It does not get erased.
Hey, a big takeaway that I
If
have
you
for your
die,
book.
it doesn't get erased. Like it goes off to somebody else, right?
Yeah.
It's true. I mean, my friends who are doctors, they had to take life insurance policies out against each other. So if they died,
It's
the
not
student
funny.
loans
It's
would get
not
paid.
funny.
Seriously,
We
before
laugh,
they had
but it's
kids.
not funny.
It's crazy
It
stuff.
hurts.
Okay, a big takeaway I had from your book is conventional wisdom is don't buy that Starbucks coffee every day. Don't go out to lunch when you're at work. You argue don't sweat the small stuff. Sweat the big stuff. Sweat the house. Sweat the car. Sweat the partner, and sweat college.
Yep.
Don't worry about those small expenses.
Yep. It's literally just math, okay? I get a Dunkin' Donuts every day when I drive to work. I get an iced coffee even in the winter, so I'm a psycho, right? So
well, I think maybe people might have thought you were a psycho with the spreadsheet and the marriage, but anyway.
We're going to table that for
so
now.
it's $3.80. If I do that 225 days a year, it comes out to $900 a year. If I do that for 40 years, it's $36,000, okay? If I get a house that's 500 square feet bigger, I will pay an extra $120,000 in interest on a mortgage. So one decision costs me $120,000 in interest versus thousands of decisions cost me $36,000. The little things don't matter at all, at all. And people can give up large luxuries. If you get a slightly smaller house, you're not sitting in the house saying, this is terrible, I hate this house. But if you're forced to give up coffee every day for the rest of your life, it is miserable.
God, there's so many. Yeah, no. We talked about this before. I feel like I want to go there because we talk so much about it. But you say you got investment basics. It's a chapter that's purely educational. You want to begin with something that's boring, but you say it's for your own good. That means for all of you who are watching and listening, the Federal Reserve, perhaps you have heard of it. We talk about it all the time. Why is it so important that people understand about the Fed? We have a very smart audience. They know what they do. But why do you say generally it's important?
I mean, just think about very recent history. The S&P was at 4150. And Christopher Waller gave a speech where he was hinting at rate cuts. Now the S&P is at 4850. And the Fed hasn't even cut rates.
Correct.
It was just on this slight change in stance from the Fed where it eased financial conditions and unleashed a ton of liquidity. The Fed really has a huge amount of control over the stock market and the economy. So that's why I put that first in that chapter, because the average person on the street, they know who the president is, but they don't know who the chairman of the Federal Reserve is. And the chairman of the Fed has much more influence over their daily life than the president does. I tell people this all the time. I don't really, outside of like some huge change in tax rates, I don't really care who is president. I care who's chairman of the Fed.
Okay, we have 30 seconds left. Controversial to have 20% of your net worth in cash. Again, you say this is for stress-free financial life, not to become wealthy in life. Talk about asset allocation just in the last 30 seconds that we have.
You should be diversified across asset classes. If you invest in stocks, you're not diversified. If you invest in stocks and bonds, you're not diversified. You need to have a mix of financial assets and real assets. You need some commodities, real estate, and gold to be fully diversified.
All right.
You were hesitant to write about gold in the book you wrote, but, because you unleash the gold bugs when you do that. But...
It's super important.
Okay.
I love this. A house is not an investment.
I know. Scary stuff.
Listen, there's so much there. We scratched the surface.
Where was this when I was 17? When I was 17 years old?
Skip the small liberal arts school and just pick up this book and figure it out. Jared, thank you.
Yeah, come back, Jared. This was a fun conversation. Jared Dillian is the author of No Worries, How to Live a Stress-Free Financial Life. The book is brand new. It is out today, so go grab a copy. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. Former President Donald Trump is sounding confident that he will win today's primary in New Hampshire. Outside a polling place in Londonderry, New Hampshire, Trump brushed aside concerns. The former South Carolina Governor Nikki Haley plans to stick with the race through Super Tuesday.
I don't care if she stays there. Let her do whatever she wants. It doesn't matter. I can just say that there's never been a movement like this. Make America great again.
Nikki Haley says it's too soon to count her out.
I'm not going to talk about an obituary just because y'all think we have to talk about it. I'm going to talk about running the tape and saving this country.
Nikki Haley says if Trump wins today, she's going to stick with it. He would be the first Republican presidential candidate to win open races in Iowa and New Hampshire since both states began leading the election calendar in 1976. Well, the latest strikes against the Houthis carried out by the U.S. and the U.K. were apparently successful. National Security Council spokesman John Kirby says they're trying to degrade the Houthis' efforts to fire on ships in the Red Sea.
These self-defense strikes targeted missile systems and launchers, unmanned aerial and surface vessels, storage facilities, fighter aircraft, helicopters, and attack boats.
Kirby says the strikes will continue if the Houthi attacks continue. A major step forward today for Sweden in its drive to join NATO. Turkish legislators took a long-delayed vote on Sweden's bid to join the alliance, and it passed. The vote was delayed by Turkey for more than a year. The Oscar nominations are now out, and Oppenheimer is the most nominated film of the year with 13 nods, including Best Picture. Meanwhile, Greta Gerwig's Barbie, the other half of last summer's Barbenheimer phenomenon, is up for 8 awards, but was shut out of some of the biggest categories, including Best Director and Best Actress. Global news 24 hours a day, and whenever you want it. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, and we've got Netflix shares now up 7.1% after hours. Netflix signed up 13.1 million customers in the final 3 months of 2023, the streaming giant's best quarter of growth since viewers were stuck at home during the early days of the pandemic. The strong tally exceeded Wall Street estimates of 8.91 million. Again, after hours, we got Netflix advancing now by 7.2%. It turned out to be another up day for the S&P 500 index. That means another record, up 14 points today with the S&P now at 4864, up by about 0.3%. NASDAQ, the composite index, up 65, up 0.4%. Dow Industrials down 96 today, a drop there of 0.2%. 10-year yield 4.13% with a 2-year 4.37%. Gold up 7.40 the ounce to 2029, up by about 0.4%. West Texas Intermediate crude down 0.4%, 74.46 a barrel. So it is an up day for Wall Street, at least for the S&P and NASDAQ, a retreat for the Dow. So what advice for investors? Leo Kelly is the CEO at Verdance Capital Advisors, and he was a guest right here on Bloomberg Business Week.
We're trying to be level-headed in the first quarter. Look at allocations, rebalance, get portfolios back to neutral, and not get overzealous with the enthusiasm that I think might be a little bit overzealous.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Again, recapping mixed day on Wall Street, record for the S&P, and after hours, Netflix, after a blowout report, now surging by 7.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Well, Tesla reports after the bell tomorrow.
Yeah, shares are down around 15% so far this year. Okay, I'm going to give you some details about tomorrow, Carol.
Okay.
The Bloomberg consensus of analyst estimates include EPS coming in at 62 cents a share, automotive gross margin coming in at 18.5%, and revenue coming in at $25.87 billion.
Blah, blah, blah. Because what I really want to talk about with Bloomberg Business Week columnist Max Chafkin is about the Tesla bingo earnings call.
Yeah, I was going to say, Max is going to be listening to the call, but I don't think he cares at all about those numbers.
Come
I bet
on.
he's just going to be listening for Elon Musk to say things like demand for Teslas is unlimited, or maybe even listening for an audible puff of a joint.
Well, I am going to be monitoring the Tesla earnings tomorrow for our first ever Elon Inc. Bingo, Tesla Bingo. Elon Inc. is our podcast that we've been doing for the last few months about all things Elon Musk. And people who follow his companies or the man know that there is this thing on the internet, which is that fans and foes alike like to make these bingo cards, basically predicting the funny things or interesting things or weird things that he is going to say on an earnings call. And we made one for tomorrow. And, it kind of runs the gamut from some stuff that you might expect, like, he will probably reference the Cybertruck and his future, his robotic beliefs, to the kind of more weird political stuff that he's been getting into. We've got DEI on there. We've got, maybe he'll say something about crypto, to the, absurd, as you said, audibly Puff's joint is, I believe that's B2 on your bingo card if you're playing at home.
Oh my God, this Pete's taking shots every time he says certain things. Yeah, I love the idea, which was the one that I thought was reasonably optimistic. Well, what does that mean?
The interesting thing, and we have a podcast that has just gone up on this. You can find it Bloomberg.com/Elon Inc., where you can also download this bingo card, I believe, or it should be available very shortly.
We just showed it too for everybody.
But what I'll say is, it sounds superficial, and you brought up the sort of analyst estimates and this kind of maybe we're doing something closer to theater criticism.
What we've really been concerned about,
how Elon Musk behaves on an earnings call. But
the lack of profit.
The interesting thing with Tesla is those things are very important to this company. Investors watch very closely the mood that Elon Musk has, on these calls. If he's dour, the stock tends to go up, tends to go down. If he's in a good mood, the stock tends to go up in aftermarket trading.
What can you learn about the way? Well,
what?
You've learned a lot about Elon Musk listening to him, but he does. I think to say his style is unique is the understatement of the century. I mean, this is a guy who is the wealthiest guy in the world. He is unfiltered completely. The SEC can't hold him down. Maybe, I don't know. I don't even know where to go. It's like,
well, so yeah, no, absolutely, and I think it's like an important part of this. So Elon Musk. Yeah, I think I've said this before on this show, but in certain ways he's like a normal business figure. In other ways, he's like a celebrity. And just like many celebrities, right? He has these catchphrases that he repeats and that take on their own sort of meaning and their own sense of importance. And that is part of like what constitutes not just his following and his popularity, but also the way he's able to command just enormous sums of money from the stock market.
But
and the way he's able to defy laws of gravity in terms of investors.
But you have some serious stuff on here, like full self-driving, right? Like how many years has he mentioned full self-driving on earnings calls? Or talking about, Tesla being an AI company?
Yeah, no, absolutely.
These are real things that move the needle.
Right, and again, full self-driving, that's like one of these Elon Musk catchphrases that on some level, right, it's false. He's been talking about quote-unquote full self-driving cars. The cars do not drive themselves. On the other hand, right, people are actually paying real money for quote-unquote full self-driving. They're paying, I think the current price is $12,000 on top of your Tesla. And investors are valuing the company based on this. So you can sort of have a laugh about things that Elon Musk says, but they are also important. They also do drive value. And it sounds crazy to say, but like how Elon Musk behaves tomorrow will affect the lives of hundreds of thousands of people who work for him, as well as this huge amounts of capital that flow in and out of Tesla every day.
It's a $664 billion market cap company, up more than 100% last year. It's down about 16% this year, but you're right. Like there's a lot of business and there's a lot of people that work. There's a lot of business that they do. And I do think that we still look to Elon as like, all right, where's this EV space going? In a year or a few months where all of a sudden we're thinking, well, maybe, things are slowing down in terms of the adoption, still growing, but not at the rates everybody expected.
Yeah, and just to get serious for a minute, I mean, so this is a big earnings call. This will be a big deal tomorrow because, for two reasons. One is you have Elon as at the center of this storm. He's at the center of a political storm. He was at Auschwitz yesterday. He's he's sort of all over the place in the media. At the same time, you have real questions about the viability, about demand for electric vehicles. Tesla bulls have sort of been telling the story that we're all going to have EVs and it's going to happen very quickly and they're going to be robo-taxis. And we're seeing data and lots of signs, not from the market, from other companies, that it's not happening as quickly as some people have predicted.
We talked about this earlier, Max, the chairman of Toyota out overnight saying, hey, we see 30% of cars ultimately being EVs. That's the absolute max.
Bottom line, that's it.
Forever.
Yeah, and I'm going to say, to Elon Musk is going to give a rosier picture for EVs, but we have seen some negative signs. The news that Hertz is having trouble renting those Teslas does not bode well for this company. And the other thing that's happened is you have a new car, the Cybertruck, right? Huge hopes there, but it's not clear that Tesla's going to be able to make them in the kind of volume that they would need to make them in order to really move the needle. You also have a car, the Model 3, that really is the same as it's been for years and years and years, and questions about whether consumers are going to continue to buy that, especially when you're presented with other options.
So which of these do you think will be first out of his mouth?
Well, there are some gimmies here. I mean, first of all, reasonably optimistic, Cybertruck, Tesla's an AI company. There are a bunch of these that are basically
Optimus.
Yeah, they're free spaces, essentially.
China.
Well,
yeah,
I
of
don't
course,
know. I'd say that's kind of right in the middle ground. And then there's some that are going to be a little bit more of a reach. But again, as we know with Elon Musk, sort of anything that's possible can happen. And these earnings calls, while serious, do present him for opportunities to make news.
I think DEI is a reach. Like I will tell you now, like I will be shocked if DEI comes. Like this is something he tweets about nonstop. But I just don't know how this would come up on the earnings call.
So listen, and you might say that insults an analyst is a reach, right?
That was a few years ago.
That has happened before. So like
complaints
before
about
we,
complains about the Fed. Like I don't know.
He loves complaining about the Fed.
Just real quickly, 10 seconds. What do we get if we bingo?
Well, we wanted to have a randomized approach so that there would be one winner. Now, if there is bingo, we will all win. I will be playing along on the Business Week X handle, and we'll also be playing along on the Bloomberg Terminal live blog tomorrow.
So much fun. Max Chafkin, Bloomberg Business Week columnist. It's a thing.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on shares of Netflix after hours. Best level right now with Netflix up by 8.8%. Netflix signed up 13.1 million customers in the final 3 months of 2023. The streaming giant's best quarter of growth since viewers were stuck at home in the early days of the pandemic. Geetha Raghunathan covers Netflix for Bloomberg Intelligence. She was a guest on Bloomberg Business Week.
What we've really been concerned about across the media landscape for all of these streamers is the lack of profitability. Netflix, of course, is the only one that's profitable. Their operating margin getting even higher and higher, just telling us that not only are they able to pull a lot of levers when it comes to monetization of their existing base, getting newer subscribers on board, but then also showing extreme discipline when it comes to content costs.
And again, we've got shares of Netflix after hours trading higher now by 8.8%. Tesla, the big event tomorrow, as we were just discussing. And then Thursday, we will be hearing from Intel. Busy week for tech earnings. Procter & Gamble, the maker of Bounty and Downy fabric softener, reported quarterly sales that did fall short of estimates as consumers continue to buy fewer items amid higher prices. However, Procter & Gamble did rally today, up by 4.1%. United Airlines CEO Scott Kirby is criticizing Boeing's handling of manufacturing miscues and says the carrier is reconsidering its order for the largest 737 MAX model, which is already years behind schedule. His remarks came this morning during an interview with CNBC. Boeing shares, they're down 1.6%. Those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. We're just getting ready to wrap up on the Tuesday edition. A lot going on. Joining us right now is Bloomberg Daybreak Asia anchor Doug Krisner. You're going to have a busy night, aren't you?
We will. I mean, it's the New Hampshire primary, so we're going to be talking about that. But did you see the Netflix numbers?
It's up 8% in the after hours.
Offshore. You were talking about Europe, the Mideast, Africa alone. I think we saw the addition of around 5 million subscribers. So of the 13.1, 5 million coming from those markets. That's significant.
That's big.
The other thing that I was wondering about, we were talking about this, maybe you have in the course of your day tackled this subject. Yesterday, Mr. Stuber, who was the head of the chairman of Netflix Films, the studio.
Yes.
So he steps away. He's going to start his own venue right now.
I wonder who he's going to sell stuff to.
Well, before we get to the open today, we have news that Netflix has got this deal now with the WWE.
Yeah.
$5 billion deal.
Don't you watch Raw?
I don't, but I'm wondering whether or not this company is making the move away from, or being a lot more judicious about what they're doing in terms of fiction, long form, and moving more toward the live event thing. I don't want to call it reality television.
I thank you for essentially just confirming what I've been saying for the last hour.
It's all
Doug,
real,
which is
guys.
just a huge pivot for the company, I would argue.
Massive.
And this is a company that got its start sending DVDs in the mail and doesn't do that anymore. So I mean, let's not forget. No, they just stopped. They just stopped. But let's not forget that this is a company that invented streaming. They said we're never going to do sports. We're never going to do live events. You come to Netflix to get what you want when you want to watch it.
But Geetha Raghunathan of Bloomberg Intelligence said what's really cool about Netflix is that they're okay about reinventing themselves. And the other thing she said is, what was it, like 45%, she said, of, I guess, stuff that's on their network or whatever you call it, their streaming service, is licensed content.
Right.
So it's not even necessarily stuff that they are creating.
But so you have the option to watch it live, but you can capture it. Remember?
Correct.
You can capture it and play back later.
That works well for WWE.
Right. And look what Max, the Max app is doing now. I mean, you can watch live sports through Max.
Yeah.
So
but it also,
you got to pay attention to what the competition is doing.
Well, and if you think about it, maybe it brings in a whole new audience, right? And this whole idea of destination viewing now, right? If you're doing something that's a live event, you can't, yes, you could capture it and I guess watch it later. But if it's sports, you kind of want to be in it when it's happening, right? You don't want to go back and everybody's told you what happened.
Raw sports? Are you making the argument that WWE
I don't know. There's a fine
sports?
line there.
No, I think many people would say it is scripted. Much of it is scripted. So people would say, it's not sport. They're athletic.
Yeah. Yeah.
So the other story that we were talking about late last night, and maybe you watched the NASDAQ Golden Dragon China Index, I know.
I do. I'm
but
religious
that was,
about
I think, a very special story on Alibaba. Did you see the New York Times reporting that Jack Ma is buying more stock?
Yes.
ADRs in Baba were up just about 8% today.
The ultimate insider buying?
Yep. But yesterday, Bloomberg reported that Beijing, the government in China, is rolling out a way to kind of fortify more positive sentiment in the equity market. It's just been some really, really tough going. So we're talking about a plan worth about $278 billion to kind of lift the spirit of investors. The way that this would be done, we are told, is that state-owned enterprises would buy shares in the Hong Kong exchange link. So it's the onshore market that you would be actually buying shares in through Hong Kong. And if you saw the Hang Seng yesterday, it was up about 2.6%. So that's a positive development. I think, though, to be fair, there are, yes, I see you kind of shaking your head. There are some skeptics here. They've tried it in the past, and it hasn't